Hello, everybody, and good morning from beautiful Colorado. Going to do a quick lesson today with some lessons from, or some shots from today, 12/28, December 28th. And it's basically on the general flow of a move and the four phases that a move goes through in what is considered to be a move. And it's referred to as pump, dump, bounce, and fade. Now, as we go and look through these, here's an example of pump, dump, bounce, and fade. But this is more of a classic example, and the pumps, dumps, bounces, and fades will not always be like this. Sometimes the pump is big, the bounce is small, or the dump is small, and then the bounce is even bigger than the original pump. It can often take many different forms, but what it is it's a tendency. And I'll say that again. It's a tendency. It's the natural rhythm that it wants to tend to flow into. And this is DRAM for today. You'll see the original, during this original pump phase, I've got the arrows in here, but we've got this morning pump into somewhere before 10 a.m. and we come back down through the 13 EMA, through the VWAP, and then come back through both of them again. Stays on top of the 13 through the bounce phase, and as the bounce phase closes and it starts fading off and making lower highs, it goes through its fade. And like I say, this can take many different forms, but learning how to just see this every day in all the charts can help a new trader develop more comfortability with what's going on with a chart. That it's natural for the price to be coming down and then coming back up. It's not that this DRM is acting crazy today. It acted absolutely perfectly normal for a move. But some new traders, especially those who got in, here high at the spikes, they're thinking, no, this thing is crashing. It's a pump and dump. And well, that's exactly what it is. That's the phase. It's the pump, the dump, and then the bounce and the fade. But learning how to play these four phases can make you a better trader and a more rounded trader. Not can, it will make you a more rounded trader. Because it basically allows you to see more during the day and more opportunities during the day. Now, these things are like Russian dolls. They're inside of all different time frames. It's one inside the other, inside the other, inside the other. And so we'll see an example of that in this slide, in DRAM. We'll see it, and this is the same stock as the earlier slide, just with further progress through time and through the chart. We're still on the minute chart on both. Now, we see on this pump, dump, bounce, fade. And the fade here basically ends of this smaller pattern, ends as it crosses back above the 13 and then confirms by coming through the VWAP here. So the red line will be the 13 EMA, and the white line is the VWAP, the volume weighted average price. These are the two indicators I use on my intraday charts. And then this continues to climb on. Now, why is this important to watch this pump, dump, bounce, fade in here and watch the beginning of a new move as this fade stops and reverses? You're able to get into this early. A lot of traders that are real into playing the morning pumps, they may not want to look at this again until this price comes all the way back at the top of the U-shape as a U-shaped breakout. But here, once this move is confirmed, this reversal off this VWAP and staying over the 13 up here, you could be in this trade a lot longer, and you can be selling your positions while other people are buying in the anticipation of the U-shaped breakout. You can be taking half off the table. And if it breaks out, that's great. But if not, you can already exit, fairly far in the green. Now, like I say, these are one inside the other. And so what you want to do is look at your larger time frames, your 15 minutes, your hours, your dailies, and see where you are in the pump, dump, bounce flow on those charts as well, because this suggests that this is probably part of a pump, dump, bounce on a larger time scale, and on the shorter time scale, this is the pump, dump, bounce fade, like we were talking about ending here. On a larger, this is probably pump, dump, bounce. And then we may have a larger fade. But learning each of these formations and how to break your trade strategies down into each formation and get good at each, or not each formation, but each phase, rather. Getting good at each phase really helps you get more well-rounded. You're not just looking for pumps all the time. You can see more of the healthy nature of the stock and have a little more holistic view of it. And like I said, going over larger time frames, it helps you get that view over larger time frames. Here is an example on Kate today. Pump, dump, bounce, fade. And I don't know where it is right now, but this was a shot at that time where it was still in the fade. I believe this thing came back up and started challenging this high day, or went on into the mid 18s. So, but you'll just start seeing this natural flow. And like I said, this will happen over many different time periods, and it's just good for new traders to go through charts and just look at pump, dump, bounce formations, pump, dump, bounce, fade formation over and over, so you get more observant in general as you look at charts on any time frame. Now, breaking your strategies into the 4 phases will also help you out, because obviously you're going to look at different things at different times. And I know it sounds very, very common sense, but for new traders to really dichotomize their strategy like this can be very beneficial, because you're not going to have the same strategy in those morning pumps, those morning spikes that you will in your late day fades, or in the rest of your day. And if you take the same strategies from the morning and try to force those throughout the day, you're going to lose money later on in the day. You're going to give up your profits from the morning. Obviously, in the morning, on those morning spikes and the pump phases, we're looking at those bull flags. We're looking at first and second 1-minute pullbacks. We're looking pullbacks into our hard trend lines that we've drawn, and we're watching. Usually on the pump, we'll be way above the 13 EMA, but we're watching for it to stay above the 13 EMA. Sometimes I'll be on the 9 EMA for a little bit tighter, and making sure I'm above the 9. But that's what I'm watching during those pumps. Also watching for what is going to be the top of the pump phase, and start watching for those candlesticks that may signify a reversal, such as the hanging man dojis, evening star dojis, watching that volume disappearing as well, watching, of course, for those reversal into the next phase, which is the dump, where people who are primarily dump traders, or we would call them shorters at that point, are looking to come in and start shorting. But there are strategies then, of course, for that dump, such as shorting once you are seeing that weakness. Obviously, at that point, your strategies of observation will change, and you will be looking at the EMA as resistance, and the stock will be staying under the EMA, coming up and bouncing it, bumping it, and then dropping down. And then for myself, I'm a VWAP trader. I watch the VWAP for possible support of what would start the bounce phase. Now, I'm also looking, when I'm looking to get in on that bounce, it may not be happening at the VWAP. There may be bounces, off the 13 EMA. There usually will be, often off chart support, previous price pivot points, that kind of thing. There's a lot of places where traders will look for bounces. I tend to look for bounces on the 13 EMA or the VWAP and confirm that with a 13 EMA. I'll often also look at Fibonacci retracement to look at Fibonacci bounce levels, especially that 50% level. Once I start seeing that as a trader, the weakness forming in the top of that bounce, which may or may not be higher than that original high, we'll start looking for the fade. It may on that bounce get higher than the original high, go through a U-shaped breakout, and then still fade off from there. Or it may not get as high as the original high of day and then start the fade from there. Now, for fades, of course, we're looking at this would be the top of the bounce here on CNAT. This was today. And this was when the fade started on CNAT. And this didn't have a real clean pump, dump, bounce fade. This was just more of a kind of a rollover and fade all day. But even still with this, we can see we have our original fade entry here. When we're seeing these tall tops and tails, have our original fade entry. And we just have the blessing here on this one of having the 13 EMA and the VWAP at the same time in price point. They were just both together at 2 points on this. This original fade, break of the 13, and get short on the fade, and short your late day fade. Second fade entry for me would have been, as you've heard me refer to it before, the bump and dump, where it returns to the VWAP. And in this case, again, classic that we have the 13 EMA right smack on top of it for kind of a double-decker resistance wall right there. And then short, that would have been a second short entry. So if you missed the first one, or you were just waiting for that because that's your pattern. And that tends to be more the pattern that I'll wait for even than the first entry. These tend to be nicer plays for me because they're a little bit slower. I can actually walk away from the computer and grab a glass of water or make something to eat real quick without just sitting on my finger on the button. The late day fade can often be a little bit more stress-free, especially once you're in the green comfortably. It can just be a little bit slower play. But it's a great play to look for when other people are not trading because they're still in the mindset just of only the morning pump, and they're not looking to adjust their strategies through the four phases. Here's a couple bounce plays from today. Excuse me, guys. Here was Kate with the bounce play off the VWAP, and it's you can look at it 2 ways: pump, dump, bounce, and fade down to the VWAP, and then it bounced, or on a larger time frame, pump, dump, bounce, and that's this was the bounce play. And you can see we have the bounce, clean beat, bounce off the VWAP, and then confirmed by the 13. That's important. This little amount that you're going to give up here in confirmation to be confirmed by the 13 is worth its weight in gold. Even though that's not gold going in your brokerage account, it's worth its weight in gold. We wait for that confirmation, and then we know we have a strong possibility of being on a bounce. And this allows us to get in early before forming the U-shape. So once we get to the top of that U-shape breakout, we are healthy in the green, and we can take a large position size off the table there and keep a small amount, or we can sell into that strength of the buyers coming in, the U-shaped breakout buyers coming in. And but that can be a healthy play when others are not looking for it. So these are just a couple examples from today of breaking down the 4 phases and adapting your strategies. And we'll do more in the future about what candlesticks you'll be looking for during those phases, and why candlesticks, the same candlestick, will be more important during one phase than it will during another. So anyways, short little lesson. Hope you guys enjoyed that, and have a great day.